Hey guys, so some people like checklists for a trade entry, but a checklist isn't as straightforward because as you already know, trading is discretional, meaning no two trades are always exactly the same. So what we're going to do here is the next best thing. We will walk through the pairs and tell you what is going through our mind step by step through the breakdown process. And as you will see, a lot of the time there is no price action available on pairs, as price goes through transitional periods, meaning the time it takes for a trade to actually develop. So here we have the pound Aussie. We first check the monthly and we spot a monthly level as this has acted as support here and resistance here. And price is at this level again. So now to the weekly. Here on the weekly, same thing, except we also have multiple candle rejections at this resistance level. So we again like this level. But as always, we're going against an uptrend. And this weekly candle has not yet closed. So we are only looking for a pivot entry and not a swing. So to the daily. Here on the daily, we had divergence at this key level and price is making a lower low. So now to the 4-hour time frame. We have a 4-hour trendline break, which is again bearish. And if you are a breakout trader, you would enter on the break. But for us, we always prefer the pivot entry. So to the 1 hour. Here in the 1-hour time frame, there were decent entries through the EMA crosses. But again, we always prefer the pivot entry. And as you can see, it does not always come. But it is the entry that we find works the most effectively when executed correctly. So moving forward on this pair, if we get good pivot entries short, we will take them. Here's the pound CAD. Here on the monthly time frame, price rejected this level here, which technically gives us a bullish bias. But evidently the monthly time frame is very big picture, so to the weekly. Here in the weekly, we had a long wick candle, rejection of resistance. But this still isn't enough because we don't know if this rejection is a bounce or a true rejection. And the weekly candle has also not closed yet, so to the daily. Here in a daily, we had divergence at this resistance level, but the candlesticks aren't great, so to the 4-hour time frame. Here we have a double top and a break of trendline, which is bearish. So we wanted a pivot entry since we are just working off of the lower time frames. So to the 1-hour time frame. Here in the 1-hour time frame, we didn't have a good pivot entry and price is currently heavily choppy. So we would still be looking for a pivot entry if one comes up. But remember that since we don't have perfect price action on the higher time frames, we only want to go for a good pivot entry, not an imperfect pivot entry. Remember that we take imperfect pivot entries when the higher time frames have amazing price action. Here's the pound yen, and looking on the monthly, there isn't much going on. But if price closes with a candle like this, where the body is above the previous candle, then this would be a higher high on the monthly, giving us a bullish bias going into the month after. So to the weekly. Here in the weekly time frame, we had a break of this trend line, but price still hasn't made a higher high. And price is also pressing against this key level of resistance, which gives us no trade. So to the daily. Here on the daily, we are at this daily level and are forming this candle rejection. But since the time frames are conflicting, we again only want a quick pivot entry if we get a breakdown. So to the 4-hour. Here on the 4-hour time frame, price is making higher highs and higher lows. So again, if we get a break of this trend line and a lower low, we will look for the quick pivot entry short, in and out. Here's the pound Swiss. And starting with the monthly, we spot this monthly level here, so we draw it in. Now to the weekly. Here in the weekly time frame, we see this level of support here and we draw it in. If price comes down to the support level, we would look for multiple candle rejections or a bullish breakout candle before looking for a reversal. If price pulls back to this key level here, we would look for good price action on the weekly for swing entries. But if there's no price action on the weekly, we would again only look for the quick pivot entry. Here's the pound Kiwi. And we went from a 1-year ranging market to breaking out and transitioning into a trending market again. Now, if price pulls back and rejects this level here with good weekly price action, we would have a possible swing trade long. Here is a key point. When we get to key levels, we always look for the counter trend pivot move first if we have good daily and intraday trend change signals, because the weekly candles take longer to form. But once the weekly candles eventually do form and they present good price action, such as multiple candle rejections, then we would look for a possible swing entry that confirms those weekly candles. Here's the pound dollar. Starting with the monthly, we had a long wick candle, but not at any significant support level. So to the weekly. Here in the weekly, we had a rejection of the support level and then a breakthrough resistance, giving us a bullish bias. So to the daily. Here in the daily, we had a break of the trend line, break of resistance, break of the 50 EMA, and a higher high. Now, if we get a pullback and a rejection of support and of the 50 EMA, and of the 14 EMA crossing the 50 EMA, then we would have a good swing trade. Even if we get a good candle rejection of this level on the daily, we would still look for the 4-hour confirmation for a swing. For us, we would still prefer a pivot entry, but the decision is up to you, whether you like the swing entry or the pivot. Here's the euro dollar. We had a long wick candle rejection of monthly support, so to the weekly. Here on the weekly, we had a break of trend line, but as you can see, through the wicks and the candles, that price is bouncing in between this range, as price looks trapped, so to the daily. Here in the daily, you can clearly see prices ranging as price hit resistance, then support, and now price is back at resistance, and again looks trapped. So we need a breakout before we can look for a trending swing trade. Here's the Kiwi yen. And here on the monthly, we're at key monthly support. So to the weekly. Here on the weekly, we have weekly divergence, which is rare, and it is also occurring at key support. If price makes a higher high, this will be the first higher high, because as you can see, price has only been making lower highs since July of 2017. We still need a breakout of resistance and the trend line for confirmation. Now, here's an important point. A lot of the time you will look at a chart and there will be absolutely no price action going on, meaning you can tell right away that within the following days or the following weeks, there most likely won't be any good price action. Here's the dollar yen. The monthly does not show anything, so to the weekly. Here in the weekly, we have this okay level here, but not much going on either, so to the daily. Again, daily price action looks very choppy and does not show any building of structure that would work effectively for a trade. Here's the Kiwi Swiss. Price is heavily bearish on the monthly, but nothing for us to break down, so to the weekly. Again, we don't have much structure, no levels and just a clear bear trend, so to the daily. Here on the daily, same thing. We don't have much structure, and even if you were to get a breakout upwards and wanted to look for a pivot entry long, it wouldn't be effective because you have no good price action on the other time frames and would essentially only be working off of the 1-hour time frame. So the two most important points from this episode is 1, when price approaches a key level and you get good daily and 4-hour price action, that signals a trend change, followed by a breakout in the opposite direction. Look for the pivot entry first as the quick entry. Then if you get good weekly price action in the following weeks, then we would consider a swing trade. 2, often you will look at a chart or pairs and see absolutely nothing. So just skip the pair because we don't force anything. Pairs go through phases, meaning you could be trading a pair for months before it dies out, and then you would move on to other pairs that have finally developed into good structure. So thanks for watching, and I'll see you in the next episode.